morning, everyone. It's Chris from Axel as well as Solstice. You can find us on either website. We're going to give an overall view of the stock market in the coming week. Remember, we're not a broker-dealer. Our past performance doesn't give us any indication of our future results. Use at your own risk. And data may be requested from us if you'd like, but please do not copy without our request. Let's go to the first slide that I have up here. And what I wanted to do is talk about the S&P, which is the Fortune 500, the large contract SPX. On the weekly bar, I put the 2024, the January low to the December high. And from that January, we had 49 bars from the beginning of January till the December, and we got a 30.28% from low to high. The following year in 2025, we had the January, February, then the reset in April. From the April low to the October high, we've gained basically 68.63 gains and 30 bars from April till October highs. We got a reset in November. That was the November high. This is the November low, and we reversed back 3 weeks back up with those 3 bars down. That was of about 5.7% decline and about 5.7 back up. So the most important thing is they're going to be continuation on these charts for the Christmas rally, and we may get a reset, or are we going to correct small? Depends what J Powell being dovish or hawkish on Wednesday. Let's go to the next slide. And what I did, I put the 3-month bars daily chart. It's a 3-month, and I showed this is the October on the E-mini micro. I didn't use the ES because I have a lot of lines, and I measured from the high to the low. The auto Fibonacci is support and resistance with a 50%, 61 and 38. I do not have the 23, and I do not have the 78%. But what I did, I took the November high through November low, and I wanted to show the 100% to the zero line where we are above the 78. I consider it like an 80%. But since the holidays, after Thanksgiving, we had a short week that week. We consolidated in this chop phase, we were creating lower highs from the top and lower lows from the bottom. And eventually we reversed back up. We tested the 6,900, but on Friday we sold off. But if you look now, we have from here creating higher highs and a higher high on these candles. The most important thing is to pay attention to the 68.10 area, 68.15, and vice versa, the 6,900 and Friday's high, in case we're going to come in or continue or break up and continue higher or come back in the range and go back long. I would not want to be short this area unless I do break the lows on Friday. But what I would do, pay attention to the Thursday in case I'm going to come back to the backside of the 61.8 and reverse back up. So I would not want to be short. I'd rather be buying the dips like what's happening in the overall market. Remember to check us out at solstice.axelatrai.com, because this one is going through construction. We moved it to this server. Once we get it up and running, more than happy, to have you go back to the main page, but use www.solstice.axelatrai. And remember to smash the like button, give us your commentary, and let us know how we can help you to improve your trading for not just at the end of the year, in the coming year in 2026, and improve your trading, your goals and stuff, and to be learning about the overall market. I put here on this chart the E-mini S&P 500. The index, which I put from 12/6, I put 10 days range from Monday last week. The rally, we had the Wednesday high. We consolidated on Thursday. Remember, in the Asian market, European market, they will be trading. We are not trading. We had a day off. Then on Friday, we had a short week. We looked up. On Monday, we looked up, came back in. Tuesday, we looked up, came back in. This was a double bottom here. in the trading hours. And on Wednesday, we rallied up. We had a Thursday an inside day, but we're trying to create higher highs. But we looked up on Friday and fell back in. So if I look at this range here, we are coming into what we call range bound box. If I come back in this range, I'm looking for the 68, 10, 12 in this area to find support and go back up. If I do look below and come back up, that would be great. If there's going to be continuation, I'm going to keep an eye on the Thursday high candle from last week and the Friday high. If I'm going to continue up and create a shoulder, come back in or break out and continue higher, or zigzag breakdown and come back to the bottom of this range before I go back up, because this is range bound box. You don't want to be trading in this box because this is consolidation. It's going to depend what J Powell says on Wednesday, if he's dovish or bullish or bearish. It's going to depend if they're going to put more money into the system. It's going to push the market higher. If they're going to say, hey, we're going to keep it tight, then it may cause a reaction to a reset. And you can keep an eye on this breakout up here where there's no volume in this area. You can see that double top here before the breakout would be a better area to buy in case we do come back down. Let's take a look at the micro NASDAQ. I'm going to do the same thing, micro NQ, and I'll show you how to do the measured move. I will do that on the micro NASDAQ. If you can see from the prior week, Monday, Tuesday, Wednesday, then we had the Thursday off. Friday was a short week. We looked up. Monday, we looked down, came back up, but we had an inside day of the Friday short week. Then the Tuesday broke out. Wednesday and Thursday created that top. You can see, but we're creating higher highs. Monday, Tuesday, Wednesday, Thursday, and Friday created a higher high on the NASDAQ. We are in an uptrend creating higher highs. If I fall back in, I would not want to be shorting this area in the NASDAQ because it is too tight. I'd rather have it come into the range and bounce back. This is the value area high on the monthly monkey bars, and this is the point of control on the NASDAQ 100. It's in royal blue. So if I come into this consolidation, if I come back in, I would look for this area for a bounce in the 25,000 in case we end up in this area, and vice versa. If I fall further down, that would be a better breakout range at the 25,000, because this has a green box on it. That means the RSI, when it was climbing up, your stochastic, your momentum indicator, your MACD, we were climbing higher. We got the reset and continued higher. We extended to the high, then we consolidated on that short week, rallied higher in a grind, but we had those 2-3 tops between the Tuesday, Wednesday, Thursday. But the bottoms here between trading hours on Tuesday, Wednesday were double bottom. We had this higher high and we continued, and this is a higher high. Coming back to this area and catching up with the 200 SMA would be great if we do come back in the range in order to continue higher, or do we fall back down to this 25,000 before continuing higher. So we're going to trade what the charts offer us. If there's going to be continuation, I am paying attention to that Thursday's high and Friday's high if we're going to break up and continue higher. So let's go in the style now. And what I wanted to do, show you on the monthly. We're going to go style. Tell me toss is working. Style. Load. We're going to load in the chart the monkey bars clean, the monthly instead of the hourly. And I will explain them how they are. We're going to go to a daily chart. Time frame. We're going to go daily, 3 month. We're going to push OK. And what I wanted to show on the monthly bars, the high and low and the point of control and the time spent, this is your value high, this is your value low, and the point of control. The time spent similar. We had looked higher. You can see that 25,830 in this candle. We looked up and came back in, but the body is, you can see it's a wick up and a small wick down, but it has created a body where it closed right on this candle of the prior high where we got the breakdown. We were creating lower highs. This is high, lower high, and a lower low. Then eventually we reversed, and these were lower lows. Then we eventually reversed, and this is higher highs from here, from the Monday wick down, looking at the 50 SMA, climbing up to the Tuesday, Wednesday, Thursday, Friday. But Friday was a look above and come back in. But the Friday's candle closed above the Thursday's close and just slightly on the high. If there's going to be consolidation here and a breakout, it would do this and break up. That would be great. But if there's going to be continuation, continue up and break out of this area, you look higher. If it's going to fall back in, I'm looking for the backside and not just the F3, not in this box. I'm looking for the back end of the prior week's low on this candle to see if I find support at F5 in order to continue higher on the NASDAQ 100. Let's do this one more on the micro ES, and I will show you how to do the measured move on the weekly on the NASDAQ as well as the S&P. This is the S&P. You can see the consolidation was a little bit more tighter, and we got to look above the 6,900, fell back down, but we closed on the Thursday candle. This is very important for me to see if there's going to be consolidation and or look above and continue up or fall back into the range of this area here where we had this consolidation up here, this breakout, come back below, and if we find support in the back area here, that will, even if we come back, create like a shoulder and a head, then a breakout of a shoulder and continuation higher, that is okay on the hourly chart. Remember, we're going to trade what we see, not what we think. Let's go do a clean chart now. We're going to go to standard. We're going to go from here. We're going to do let's go to clean. And from here, I'm going to show you how to do the measured moves on the daily, the weekly, and the monthly for ES and S&P, and we can look at some equities and other stuff in the different sectors. Let's go from here. We're going to go from the daily 3-month. We're going to go to a time frame intraday. From the intraday, we can use a 10 or 15 days. I'm going to use just 10 days. I'm going to do a 2-hour chart instead of a 4-hour. We can do even an hour chart to show you how this will look like. This was the 10 days range. So what I'm going to do is start from Sunday, last week's low. That was Sunday's low. You can see it where Sunday started. That was Friday. The short week trading hours, we can take the low from here to this high. And what we do, we measure the measurement. This is a measuring tool. I do have extensions to the upside, 100%, extensions to the downside, minus 100%. And what we're going to do is edit the property. We're going to make it one color. You can see the extension from 0 to minus 100, 0 to 200. And I usually use the 180 to 200 as overextended and minus 80 to minus 100 as extended to either side. We're going to use baby blue or cyan. Push OK, and this will give me an overall view on my extensions in case I fall back in this range and find support. You know, even if I find support at 50 or the 68 or 68, 02, 68, 10 would be a great area to find support if we fall back in here and bounce back for a buy. But if I do fall back in, I would look for the 50% or the 80%, minus 80 in order to continue back up, and vice versa. If I do break out from the Thursday's candle, which is my 80% high, and if I break out above the 100, I would look for the 150, 160, 180, and maybe, take some profit off up here if there's going to be continuation to the upside. This is on the micro ES. I'm going to show you how to look at it on the micro NQ. You can do that as well on QQQ or SPY, so they are very similar. So we're going to zoom in from Sunday. We're going to take a look at the bottom from Sunday to the Friday's high, and I'm going to do the same drawing. And what I'm going to do is edit the property. Okay, and what I'm going to do, we're going to make it into a cyan, but this time I'm going to extend it to the left to show you how to look at it a little bit more on a 10-day scale. So we did it as baby blue or cyan, and we're going to minimize it so you can see the extensions coming back to the low side where there is major support. If the Nasdaq falls in very sharply and very hard, I would consider the 25 to 25,000 is a good number for buying the opportunity if in case it creates a down move, a little up and a continuation. I would not trade in this box to the short side. I would look once we break in, we go lower, then this is your short, then it's vice versa once we get in this area and reverse back up. But if there's going to be continuation and I do stay above the Thursday 80%, the Thursday's high, and the Friday candle, and we get a breakout, I would look for the 125, 150, 160, 180 to take some profits. Either way, we're going to trade what the overall breadth and the New York Stock Exchange gives us in relationship to the S&P and the Nasdaq. Remember, the Nasdaq is a more concentrated 5 sectors, while the S&P has 13 sectors in it. And I hope this is helping you understand that we have to trade what the charts offer us. And I will do now this time IWM, which is the Russell 2000. And the reason why I wanted to put the Russell 2000 here on a daily chart 3 month to show you the overall market where we are in relationship to the move back up and down. You can see that in the sector rotations, what we did when we were creating lower lows and lower highs, we reversed back up and pushed to this top up here 1, 2, 3 times. I do consider that double top is a poor high on the Russell. It may need correction. A poor high is basically in the volume profile. Those volume profile was the time spent. I call them monkey bars or market profile. They have a value high, value low, and a point of control and time spent in the 24 hours during trading hours between the European and Asian markets to see what the instruments offer us. You can see that we created that double top from the Monday low. This was Monday, Tuesday, Wednesday, Thursday, Friday. We looked up and fell back in halfway, but I am paying attention to this consolidation right here in case the Russell falls back in, kind of creates a shoulder and goes back up. That's great, but if it does want to fix the top and reverses and does this and bounces up and clears the top, I'm looking for a higher high in the Russell. So this is how you look at the overall market on the Russell or the S&P. Let's now take a look at the SPY. And you can see in the SPY, we do have an inverted hammer, but we closed above the Thursday's high. This is very important in the low of this candle in case we come into this chopping block. If we fall in, then I would look for the backside of the 678 area, which is similar to the 6800 in the E-mini S&P 500. We can take a look at now the QQQ. I'm just showing you that the body on the QQQ was a little bit higher, but we're creating higher highs. You can see here, we pushed a little bit from Monday, Tuesday, Wednesday, Thursday, Friday. We pushed higher, creating higher highs from the prior week's push back up. We were creating lower highs, then eventually reversed back up. So let's take a look at the XLK. Oops, XLK. You can see in the XLK, even this area, we do have this small gap here in the island. You can see we are getting supported at the 145. In case we do fall back in and create a shoulder and a reverse back up, that would be great. That's an XLK. The semiconductor SMH. Because there is sector rotation. You can see in the SMH, it looks like the QQQ or the NASDAQ 100 and an inverted hammer with a small body between the open and the close. We just closed on those 3 tops on semiconductor SMH. And you can see that this gap here, that was the downtrend. We rallied back up on that short week. We had a 5-day range from the Monday, Tuesday. This is Monday, Tuesday, Wednesday. No, I'm sorry. This is Friday, Thursday, Wednesday, Tuesday. This was the Monday inside the day of the Friday, but we closed up. We looked below, we opened below, we fell down, came back above and closed above it. We looked high and closed above. So this area of consolidation is very important in case we fall back in, continue higher, or do we eventually break up here, because the sector rotations is happening from the NASDAQ to small cap, and different companies in consumer products, staples, as well as shopping malls for the Christmas holidays and stuff like that. So pay attention to what sectors are moving. Let's take a look at the VIX. I'm going to use the VIX, which is the ETF Fear and Greed Gauge. This is the volatility index. You can see on the daily 3 month after looking above this area, and I had this marked. I'm going to edit it and extend it to the right a little bit more. Let's put it till 12:20. That should be okay. You can see we fell back in that bottom range. If J Powell ends to be whether dovish or bearish, we're going to pay attention to the VIX in case we do break out of that wedge downtrend back to the upside. And usually once we get between the 1950 to 20 and we break out, you look for the upside to the 25.30. Usually this area has been rejection for a while, but I wanted to show the VIX in relationship to fear and greed, because a lot of the people are talking about, hey, there's a little fear, but there's actually sector rotations in the market, and the dips have been brought in the overall market. Let's take a look at the micro BT, which is Bitcoin, micro BT. And you can see in the micro BT, I had left this prior week's Fibonacci on it, or the measured move. We can see that in this consolidate, I'm going to remove it. You can see in that downtrend from that 27,000 and the 116, 120, we fell down, creating lower highs. Even this shoulder at the 90, I said to everybody, if we do not clear 95,000, 753, maybe there's still going to be continuation in Bitcoin to the downside. But what I can see here, you can see this is a higher high from here. But in case I do fall through here, then you look for the bottom end, because this was consolidation for 2 weeks. But if it reverses and clears this wedge and clears the 95,000 area, then there's going to be continuation to the upside of this consolidation between the 99,000 to the 103,000 if there is a reversal back up. The way it is setting up, there's no trading here. You are in chop. Or even if you look at an ETF such as a bit minor, BMNR, because that's a leverage electronically traded fund for Ethereum and Bitcoin. You can see I do have a lot of lines on it, as well as Fibonacci's, as well as pivot point or point of control. You can see where my high was at 65. I consider this a double top, like a crab pattern. Tried to look up, created a cup on this side, or a crab pattern. The arm couldn't lift, eventually fell and creating lower highs. We tried to push up here, we fell back in, we pushed up, but we closed inside this range. As long as I am above the $32 range, $31.50, there's going to be if it reverses back up and clears this candle in this one, then you look for F3 and F5. But if there's going to fall back down, then you look to see if it's going to create you can see that uptrend channel. If I draw an uptrend channel on it, you don't want to lose that uptrend channel. Or you can do it on Bitcoin as well. You can see that uptrend. If it loses, if it finds support, that's great. If it doesn't, then you take the distance from this high to this low, from the Monday through Friday, measure it to the downside, and you'll get those extensions. What I'm going to do is show you how to do this on the daily candle from Monday through Friday. You can do that. Edit the property, make them one color. We can do them again to show you how this is the setup in case we end up falling back to the opposite side, from the -80 to the 100, finding support and reversing back. And if there's going to be continuation, we're going to get a hold on. We're going to get continuation and a breakout. We'll look for this upside and continuation to the upside. So I hope this video is helping you to understand the levels without being biased. Let's go to all the sectors in the S&P or the Magnificent Seven. I have included in there Netflix. You can see in this consolidate, we had a lot of consolidation. We looked up, we failed. You can see that that's a shoulder, that's a head, and we kind of creating a higher shoulder here, but I am underneath this candle. You see, we looked above it, failed in. But if it's not going to continue higher on this uptrend channel and I end up creating a lower high, I would look for this consolidation in this box to find support in order to continue higher. So you can look at each one, such as NVDA, Google, Amazon, Apple, Tesla, Netflix, and so on. So I just want to show you here the difference between NVDA alone as well as Google, NVDA, because there are sector rotations. But what I wanted to do is this. You can see on daily chart 3 month NVDA, that was the one to go to all the time and buy it and run it up. You can see it created that shoulder, created that double top, fell back in, created that right shoulder and left shoulder. You can see it fell back in, bounced up, but this is in a very congested area here. This, if I create a box, this is considered congestion, okay? So everybody understands why I am calling this congestion. So this is congestion. In order for me to continue higher, I want to pay attention to the Tuesday's high. If I can clear F3, because you can see the support and resistance. If I end up clearing here and Tuesday's candle, then I would look for F5 and F6. But if I cannot, and I would lose the Wednesday's candle lower, I would look for the bottom end and the backside of the channel and the consolidation of these candles down here on NVDA. I trade what the charts offer me. You can use an RSI, a MACD, a stochastic, but some of the indicators are a little bit lagging. I don't have a 50 SMA here. All I have is fibs and candle reading for you guys to understand that we trade the charts. Always people looking on the technicals. I'm a technical trader. I use AI. I built my own algos to help us out in the trading group on Discord. But I want you to remember there is rotation like AMD as well as NVDA, a little bit on the lagging side. So if I'm going to look at Google, and I'm going to use Google, and you can see after the earning report, we had that run up, consolidate, run up, creating higher, but this is around the top. Even if Google comes in and fills this gap and goes back up, that would be great. But if Google falls back in this area or finds support down in this range bound and continuation, that is great. But if I do break up and continue higher, because I'm creating lower highs, but this is a rounded bottom, in case it does a shoulder here in order to continue or not, you have to pay attention to these things. And you can see in PLTR, I'm just going over some stuff. You can see it's what most people were looking in that downtrend channel, and eventually after the Monday candle, we gapped up. This is the Tuesday, looked up, failed, then Wednesday popped up, closed above. Thursday looked halfway, bounced up. Friday looked into the close, cleared the close, and rallied higher. So in case Palantir creates a right shoulder here in order to continue, that would be great, because this is what we try to do as investors. Try to predict the right side without being biased, using momentum, supply and demand zones, as well as in the market profile. Last but not least, I want to go back, show you how to do the NASDAQ 100 on the QQQ or micro NQ to show you how to do this micro NQ. We can see that the micro NQ, what I showed you here, but the most important thing in trading is understanding the bond sector, the consumer products, the staples, and so on, and the robotics. Because if I look at the NASDAQ 100 in relationship to ARK management, let me just do ARKK, okay? And you can see that move back up. You can see we were in a downtrend here, and eventually we reversed back up and cleared this candle. We are still creating a lower high, but if there's going to be continuation, you have to clear this area, which is a box. I'm going to box it again for you guys so you can see that this area is going to be very critical in order for ARK management to clear. That's a lot of congestion where we looked down, rallied, looked down, and broke down, came back to it, couldn't make it, came back down and trying to rally back up. You have to clear this area in order for the momentum to shift higher. Let's go back to micro and QQQ. We'll do this on QQQ. They are very similar, but what I want everyone to understand, if I'm going to look at the 90 days, 1 hour chart, let's go 90 days time frame. Intraday, we're going to do 90 days. 1 hour on the charts. So we can see the overnight price action with the daily charts. You can see from the prior month that consolidation here, 1, 2, these ones up here. Then we came back to them and rallied up. But if I zoom in this area, you can see that there is a little bit of congestion in this area. We can put a box on it. And what I'm going to do is create a box in this area so everyone can see it. We just remember, I'm trying just to give you an overall view in case the market does change the trend and continue higher, or do we fall back in this range to the lower end here in order to continue higher. So if I zoom in from the prior week's consolidation and the short week trading, what I'm going to do is take the high to the low on Sunday and measure it in order to help us understand. I'm going to go get the measuring tool. This is my high. This is, oops, we didn't do it. Okay, measuring tool. This is my high. This is my low for Sunday. And you can see where the consolidate, we're going to leave these colored right now. We can extend them to the left, but what I'm going to do is bring in the 50 SMA on the daily, on the QQQ, as well as these Fibonacci's without the monthlies to show you how we can do it. So we can go in here in the style. We're going to add simple moving averages. And in here, since I moved the simple moving averages, what I'm going to do is create a 50 SMA. I'm not going to use an 18. I'm just going to show you how to do this. I'm going to make it yellow. That's what we use. And we're going to make it the thickness of 2. For most institutions, usually the 50 simple moving average acts as support or resistance breaking down, and vice versa, finding support and breaking up on the daily and hourly chart and so on. So if I zoom in here, you can see that the 50 has been tested so many times. We are holding it. But if I go to the daily chart, we're going to go intraday, daily, we're going to go 3 month. We're going to do 3 month. We don't need to go that far. And you can see that 50 SMA when we fell back down. And then the following week after we broke here, we are holding the 50. Above we got the 18 SMA somewhere here. If we find support down in this area, that would be great, which is around the $615, 612, because that will give me the QQQ or the micro. I just wanted to show you micro and Q levels on the charts where that support and resistance are. If you can see the micro NQ, we created the 0 to 100 coming back up to this area here that would find support on the NASDAQ. If it doesn't, then we'll look for the 25,000 in case we do fall below that. And we do have 100 SMA, we do have 116, as well as the 250. So we trade what the charts offer us without being biased. Let's go here on an intraday, go to an intraday chart. This will be my last chart, 20 days. And what we're going to do is go back to the hourly and find that every time we are in a downtrend or uptrend, I'm looking for reversals for support and resistance. I'm not using 100 or 116, but I wanted you to show you after that breakout from that Wednesday and the Thursday, Friday short session that was Thanksgiving, we tested that double bottom, rallied up, consolidated in this area, because if I do lose this area here, this box, I would look coming back to down this area before I do jump back in to a long. So I would buy the dips, but in case of a reversal and I clear the Thursday, Wednesday, the Thursday and the Friday's, overnight high in order to continue and clear the Friday's high, then I would look for the 123, 138, 150, 161, and 178 would be close enough to this area up here to take some profits off. So you trade what the charts offer you. I hope this video was very helpful. If you have questions, remember to check us out at www.solstice.atrai.com or at axelatrai.com and contact us at 949-414-8484. We're here to help. Take care. Over now. Enjoy your Sunday.